Hello, welcome everyone. Thank you for joining us on our webinar today, Insights from Shibumi's 2024 Strategic Portfolio Management and Transformation Benchmark Survey. We're very glad to have you with us here today. You're going to hear today from Bob Namias, our founder and CEO at Shibumi, our Chief Customer Officer, Mark, and myself in product marketing here. So in our time together, Bob, our CEO, will highlight some of the key findings and results from the survey, which we conducted in December last year. And he's also going to discuss how the results compare with what he's seeing in the market, his experiences with our customers. And Mark will just show you a few examples of how our current customers are running transformation programs, managing strategic portfolios, and working with Shibumi. The outcome we hope for you is that you get some useful insights that you can take back to your roles. And if you hear of any interesting, if any of the customers we mentioned today are ones that you want to talk to and learn more from, you can reach out to us and we'd be happy to connect you and make those introductions. We really want to have a conversation with you, so we have time reserved for Q&A at the end as well. I'm going to turn it to Bob to get us started.
All right, great. Thanks, JC. Really appreciate everyone taking the time to participate today. So I want to start things off with a quick little discussion around kind of what we're seeing overall in the market and what's really driving the case for change, right? And why organizations are investing in strategic portfolio management and transformation. And I think one thing that I think a lot of us have seen over the last 20 plus years is there's been a massive disruption in organizations, through technology, through market innovation, where the Fortune 500, over 52% of the Fortune 500 have been displaced, and that pace is only increasing. There's a lot of studies out there that's saying that's going to almost double over the course of the next 5 to 10 years, and a big part of that is that organizations are really seeing competition coming from all angles. They've seen significant changes in the markets that they're competing in and the influences on those markets. And never then before has it been more relevant, the Darwin quote, that it's not the strongest that survive, it's the most adaptable to change. And we're seeing this significant trend over the last few years where, 5 years ago, most organizations might have a transformation program going on that was temporal. Maybe it's a 1-year, 2-year transformation where they'd be trying to achieve some set of outcomes. And they'd go try to achieve those, and then the transformation officer would go back to their day job, and they go back to quote unquote business as usual. But what we're seeing very much consistently across the market is that this need to have a transformation discipline established in the organization is critical for high performing organizations, right? That ability for them to consistently take a look at the KPIs that influence their business, take a look at the market conditions, and really define measurable outcomes they're trying to achieve and drive the kind of ideation they need to achieve those outcomes. Be able to prioritize investments because they're all competing for the same human capital and financial capital, be able to prioritize those at very periodic points in time over the course of each year and beyond, and then be able to really vigorously execute against those objectives and be able to forecast how they're performing and be able to reallocate resources to their priorities. So we're seeing that trend very consistently. And for those that aren't heavily familiar with Shibumi, right, part of why I think we've had the reach necessary to do a study like the one we're going to share today is that we've been in business for the last 12 plus years, helping some of the largest organizations in the world, both public and private sector, tackle their most challenging transformation challenges. So we've worked with all 10 of the top 10 advisory firms in the world, delivered over 100 billion in business value through a really broad range of transformational programs and strategic portfolio groups. So what we're going to do today is, and I'll hand it back over to JC. She'll give you some of the background on kind of what went into to the study, how we came up with some of the insights that we're going to share today. And then we'll bring it back, as she mentioned, with myself and Mark to kind of how does this relate and how do some of these results relate to what we're seeing both in the market in general, but also with very specific customer examples that we'll share with you today.
Great. So because, we at Shibumi are really invested in helping organizations know and implement best practices around strategic portfolio management, around different types of transformation programs, we wanted to get some market insights on how organizations around the world are actually doing things today. So we surveyed 265 decision makers back in December 2023. The people we surveyed, they are directors and up. They include corporate executives, heads of finance, transformation office leaders, strategy office leaders, and program management offices as well. They come from 15 industries. They come from the US, Australia, the UK, and several different EU bloc countries. We specifically wanted to focus on larger organizations. So we just talked to organizations with more than 1,000 employees worldwide and more than $100 million in annual revenue in 2023. And we asked them a lot of different types of questions and try to be pretty comprehensive. So we asked these survey respondents questions about the different types of programs, transformations that are happening in their organizations. We asked about how they set up their offices or teams to lead those initiatives. We asked about their current practices. What are they struggling with today? What they think is going well? What they plan to do to improve things? What systems they're trying to use to manage their programs, and how they're viewing AI as well in being able to enhance and improve their programs and processes. So that's a little bit about the methodology. You can actually also read the full report. It's an attachment in this portal. You can download it right away if you like. But I'm now back to Bob to kind of talk about the key results.
Sure. Great, JC. That's really great background. So what we'll do is we'll take you through kind of some of the key themes that we've seen, and then we're going to step through each of the core sections of the report and highlight, as I mentioned, kind of what we saw in the results, but also how they relate to some of the examples that we're seeing with our current customers. And give you an opportunity, as JC mentioned, to potentially reach out at the end of this session, and we can certainly connect you with some of those customers that have had experiences that might be interesting to you. So the first thing we wanted to do is highlight some of the overall key insights that we pulled out of the report. And I think first thing we saw, which again is not that surprising considering what we're seeing generally in the market, is that 70% of organizations are going through some large scale transformation. And I don't think that's going to slow down. I don't think that's going to, if anything, it's going to probably be 100% for most large organizations within the next year or two, as they start to realize, that with AI and everything else going on in the marketplace, the pace of innovation and potential disruption and competition that's coming. What we found interesting was that 80% of those transformation offices were significantly growing. So not only were they going through transformation, they were really creating an office and scaling that office in terms of both the resources involved as well as the scope and responsibility that they had. We also saw that 75% responded that they'd seen a really material compression in planning cycles. So this again is something that we've been seeing as a broader trend in the market, right? I think over the last 3, 4, 5 years, the idea of an annual planning cycle and an annual budgeting cycle that kind of stays relatively fixed has really gone away for most organizations. Obviously, the most glaring example of that was 2020, where folks may have gone through an annual planning cycle at the beginning of the year, and COVID hit in the early spring, and obviously all those budgets went out the window, and reallocation of resources happened and priorities happened. But I think it's continued to accelerate throughout the last few years, to the point where almost every high performing organization we talk to has gotten to the point where they're at a minimum doing quarterly recalibration of their core priorities and investments, as well as even getting to the point where on a monthly basis they can reallocate resources and they can reprioritize some of the activities that they're going through. So that's not surprising for us to see, but certainly something that we expect to continue. The last major insight that we saw that I think is really where some of the challenges arise for most organizations as they try to really execute consistently at a high performing rate is that the majority of organizations responded that they did not have the data that they needed to adapt to those shifting priorities. So the transformational need was there. The planning cycles are really getting compressed. We need to make recalibration and reprioritization decisions, but many organizations don't feel like they've got the right data to be able to do that. So that's been a lot of the focus that we've been seeing in the market, honestly, over the last couple of years, is how do you help organizations get the right data as well as the right structure and rigor in place to make very objective decisions around how to reprioritize and reallocate both capital, human capital, financial capital. So as we drill in a little bit deeper into the insights, why don't we take a second and talk about some of the areas where transformation, investments are happening. Right. So the number one respondent that we saw, or topic that we saw in the responses, was AI and data science, and that organizations were really scaling significantly, how they were applying AI to innovate or transform, how they were evaluating applying AI in their organization, and really trying to answer questions around how they could leverage AI as a value lever for the organization to be much more efficient, as well as to be more innovative in how they deliver products to the market. So the second big one was around digital transformation. I think this has been a pretty consistent player, certainly, for the last 4+ years. I think obviously COVID was probably a massive accelerant for digital transformation for most organizations, as they realized they needed to have the ability for their workforce to be able to access data and information in new and innovative ways. And then the third one, which we've seen growing each year for the last few years, is sustainability. So organizations' ability to both execute and track and manage their investments in driving renewable energy and renewable practices that allow them not only to take advantage of some of the things that are out there and available to corporations from a commercial perspective, but also obviously be really strong citizens in the global market. So we're going to dig in, and Mark's going to take us through a couple examples of or at least an example of each of these areas as we step through the results. So I'll turn it over to Mark.
Yeah, thanks, Bob. Yeah, so we wanted to do this, have a bit of a customer use case after each one of these statistics to just kind of bring it to life for everybody in the audience. And if any of these are interesting and relevant to what you're doing, please reach out to us and we'd be happy to connect and get some kind of cross collaboration going. This one was hard to pick just one, because we have, really all of our customers are doing just about all of the different transformation types that you'll find in the study. But this one of our large property and casualty insurance company customers, they're really doing a little bit of all three of those transformation types that you saw on the previous slide. This one is a little bit interesting too, in that they are a large multinational organization. They have many different business units that are operating, all with historically a certain level of autonomy, and they wanted to keep that and hold that structure off into the future. So they had a little bit of these competing priorities. They wanted a very consistent approach around SPM and all of the transformation programs that they're running, but they also still wanted to give that certain autonomy to all of the business units that are contributing. So that was what we worked with them on, defining a structure that would support that. And really what we settled on with them is there are certain business objectives and KPIs that the centralized SPM group wants to drive and achieve, and the whole organization wants to drive and achieve those. So all of the various business units that are executing out in the organization, they can run their programs as they want, but they have to account for the key business objectives and the key KPIs that they're contributing towards. And all of that gets communicated and rolled up into central views that allow the central team to make sure, that they're delivering on the objectives. And we've seen this in a couple of different cases. The larger companies that we work with all have a bit of this federated approach. And so, we've used this model in a couple of instances in the past to great success. And if you're struggling with any of that type of challenge, we have some customers that we can connect you with to kind of share, challenges and tricks that they've found to really drive success there.
Great, Mark. Thank you. So it's a good segue, right? What we're seeing more and more in most high performing organizations is they've established a strategic portfolio management office, and they may call it any number of things, right? It could be the strategy realization office, it could be the enterprise program management office. But at the end of the day, it's typically a group of individuals in an organization that's responsible for executing the strategic initiatives, projects, investments that are having a measurable impact, that's relevant at the C-level and board level of an organization. And so we asked some questions around kind of what's happening to these offices. Are they scaling? Are they contracting? What does the headcount look like? And we saw that 61% of the respondents said their scope and area of responsibility had increased significantly year over year. So that they were seeing really the scope of that office, of that SPM or enterprise program management office, growing. 82% of them said that they had expanded the headcount in the last year inside of that function as well. So they had really been staffing to be able to account for their responsibility as well as influence across the organization. The other thing that was interesting is that they expect 80% of the organizations expected that to continue to grow and scale. And this kind of gets back to some of the comments I made earlier at the beginning of the talk, where there really has been this significant shift over the last 4 or 5 years to establishing an enterprise transformation office. The chief transformation officer being an actual title that's an evergreen role that honestly is a peer in many high performing organizations to the CFO and to the CIO and to other C-level executives, because I think most high performing organizations are realizing right now that if they don't have a very focused and dedicated organization thinking about innovative ways to disrupt their go-to-markets, whether that be how we offer goods and services, so how we drive operational efficiency, or a group focused on what are new products that we can launch in the market, or possibly even a group focused on when we can't organically grow and improve the business to the levels we need to, where should we be acquiring new entities? Maybe it's combined with traditional corp dev functions. So really that transformation office in most of our customers that we surveyed is growing. And obviously some of them aren't calling it a transformation office at this point, but at the end of the day, it really is that group that is focused on these types of kind of innovative approaches to try to improve the business across the board. So Mark's going to, again, share an example with one of our bigger clients.
Yeah, so the interesting thing here is, how does this actually happen? SPM is gaining influence. It's true, but how does that work within organizations? And what we've seen, the way that it typically happens is it usually starts in one program or one business unit within an organization, and it grows from there. And that scope and influence of SPM starts there and then expands. So this example, a medical device company that we work with, follows a very similar path. We initially started working with them, a few years ago at this point, really focused on a PMO for one of their business units. Every business unit had their own PMO. And so we started to craft a PMO solution, or implement a PMO solution for this one business unit. It actually quickly turned into a transformation office, and they really adopted this SPM approach around defining objectives and focused on business benefit. What happened after that is, success gets attention. And so a lot of the other business units and organizations within the company saw the effect that this approach was having. And it quickly spread, right? So this one business unit's transformation office became an enterprise transformation office. So it very much, gained the influence across the entire organization, and it's now been adopted, as the enterprise standard, this transformation office. And now they're getting, really all of the business units in North America where they're based, but really all over the world, because they're a very large company, are now contributing in, and everybody's aligned and focused on the key objectives and the key KPIs that they're trying to achieve as an organization.
All right, great. Thanks, Mark. So as we think about the transformation office and the enterprise program management office, we asked some questions around what are the core measures or metrics that those offices and those organizations were tracking and really were using to improve portfolio management and impact the organization. And not surprisingly, right, 59% of the respondents talked about customer experience and satisfaction, and really the impact that that those initiatives and those programs were having on the organization and customers. So that's great to see, and that's always going to be really a core focus, right? Are we really improving that overall customer experience? Are we really overall impacting our overall effect on the organization? The second one was really around quality. So and obviously they go a bit hand in hand, right? Are we really seeing improved quality around both our processes as well as our product quality and things that we're doing to try to make sure that we're executing as effectively as we possibly could? And then the third area, certainly we would like to see grow and is ROI, right? Are we seeing and are we able to prove and demonstrate that our investments are really delivering a return on the capital that we're spending, whether it be human capital or financial capital? So I think in all of these areas, we would expect these numbers to grow, right? I think the highest performing organizations you're gonna see every single one of them have all three of those key metrics. We also asked the organizations, what would you like to be able to track, maybe that you're not yet tracking today, or that you're not yet able to influence? And a big area of focus was around change adoption, right? And I think most organizations really struggle with their ability to actually affect the right level of change and really getting initiatives that are sponsored across an organization to really take root in all areas of the organization that they need to be fully effective. So are we really getting the change adoption to get the full potential of what these initiatives are offering? The second is really that ability to do budget adherence, right? Are we in a position to really effectively make sure that we're able to execute on the key initiatives, projects, and investments that we're doing while staying within the budgets that we've allocated? And honestly, being in a position to have tranche-based gated funding where we're in a position to reallocate capital perhaps to things that are having great success and potentially shut down or potentially stop or pause things that aren't. And a big part of that is being able to really manage those budgets in a more granular and effective way. This goes hand in hand with some of those compressed planning cycles, right? Historically, organizations have had to allocate capital, either for the year or due to management challenges around being able to do this on a periodic basis. And they've had to allocate larger amounts of capital before being able to recheck and recalibrate. So this budget adherence and that ability to manage those budgets is a big wish for many of our customers. And then around innovation indicators, right? How do we really understand what we can do to drive better innovation in the organization? How do we really understand kind of how to measure the success of that, and how do we prioritize? We'll talk a little bit about it later in the session today around AI and how organizations can figure out what are the right innovation investments that are really going to transform the business. So these are some key areas that we're seeing organizations focus on, and I think quite a few of our customers are wrestling with what they can do pragmatically, but also where they really want to go and where they really can take the organization with the right tools and processes in place. So Mark, do you want to share another example of this?
Yeah. So this approach around managing to KPI performance, it's really important for every company, every business, but really none more so than the airline industry. And this customer, a really large, low-cost European airline, really has adopted this. In their industry, obviously, the competition is very fierce. Margins are very tight. They're really impacted by greater market forces. That throws curveballs at them all the time. So they have adopted this approach of focusing on the expectations of every single one of their programs and initiatives. And so before it's even approved, you have to define a pretty detailed business case, which includes financial KPIs, but also non-financial KPIs, right? Really, both are important. And based on those expectations, you get approval and investment, and then you move forward in execution. Then they very closely monitor how well you're achieving the benefits that were expected initially. And if those start to veer off, deviate, change, we're starting to fall below our expectations, they pivot quite quickly. They move focus, they shift focus into other programs, initiatives that may deliver better results. So they really do live and die by this KPI performance of all of their, really it's portfolios and programs and initiatives and really everything that's being tracked across the enterprise. So it's a great one if it's very data driven. If you're thinking about that or want to incorporate that, this would be a great example, a great customer to connect with and kind of pick their brain to see how they're really adopting this.
Great, thanks, Mark. So the other thing we talked to the respondents about were, what are those capabilities that SPM offices felt were most valuable as they were trying to go and execute and prioritize and manage and execute those initiatives. And number one in the response was actually cost management. So how are we tracking and managing at a more granular level, the costs that we're investing, and are we able to really demonstrate that we're managing that effectively? You heard it in the last slide when we talked about that ability to do budget adherence. So that's certainly a theme. Resource management, very key. Prioritization, benefit realization management is big, and it ties with cost and to be able to deliver on an ROI. Can we clearly and definitively demonstrate what type of ROI are we achieving, as well as be able to manage to changes in our assumptions and how they influence and impact our current expectations around ROI. Risk management is a big part of that. So how are organizations identifying critical dependencies? How are they able to understand when those dependencies are becoming, material risks on their ability to deliver on those outcomes? And then most importantly, in all that ability to really take all that together to reshuffle and reprioritize allocation of resources as well as allocation of capital towards the things that are actually going to have the impact we really expected, right? A lot of people have great ideas and good business cases early days as they're planning out these initiatives and projects, but often the assumptions that went into that business case will change materially and evolve over time with changing market conditions and changing plans. I would say that what we saw pretty significantly is that folks are seeing project status reporting and lessons learned as kind of table stakes. Those are things that they're not having a lot of challenge in performing. And then enforcing portfolio standards with the stakeholders, challenging at times to do, but it wasn't really in the same value category, I think, as the ones we mentioned earlier. So again, Mark, if you want to maybe take us through some example.
Yeah, so this customer, a manufacturing company, they were having these same challenges that we saw in the previous slide, collecting all of this data, and they really looked inward. They turned inward to try to address that challenge. And really what they were focused on is kind of the intake and the approval, prioritization and approval part of the process and all the information that they need for that. They have, being in that industry, a massive transformation program that is stood up. They need to keep up with times and, innovate like everyone else. And so they really did turn inward and include really every employee of the entire organization to contribute to this transformation. To the point of, even they have, QR codes set up within the company where somebody can easily scan that QR code, brings them to an intake form. They can submit an idea for a transformation initiative, whether it be a big one or a small one. They just want that input from the organization. That is then submitted into the system, and then they can progress it and move it forward in the life cycle. And they've had great success with this. They've uncovered great ideas that they probably wouldn't have otherwise if they didn't really include everybody, get everybody involved, and kind of run in the same direction here. Yeah. And then as far as that last slide goes too, so that intake and that idea, that's great. We got it. We need a little bit more than that though, right? We need to define What resources would we need? What kind of benefit should we expect from this? And so that's where they additionally include, other team members and other groups within the company to put a little meat behind that idea. And so this gives them not only the great kind of innovative ideas from really everybody in the company, but a little bit of they quantify those ideas a little bit to give them that information to prioritize and approve if they want to move forward with it.
Thanks, Mark. That's great. No, I definitely, we're seeing that in just about all of our high performing organizations. They're getting far more of their employees, clients, and others involved in the ideation process. And I think most of them are doing a really strong job of gathering the business case data and the resource requirements and some of the financial, data that they need to really initially prioritize those investments. I think what we saw was 40% of the executives surveyed said they were confident that they actually had the data needed to adapt and priority shift, which really by the converse means 60% of the organization surveyed didn't feel they had the data they needed to adapt as those priorities shift. And I think that's one of the great challenges, right? Being able to codify a business case in a way where the core assumptions that go into that business case are in a place where you can really understand how changes in your plan or changes in those assumptions really influence and impact, whether it be the ROI, whether it be the resource requirements, or whether it be the risks associated with a particular initiative that then give you that data necessary to adapt as your priority shift as an organization. And we're seeing that even the alignment to some of those strategic objectives in the business. So you understand if the organization is leaning much more towards near term maximizing profitability versus maximizing near term growth. Those shifts in some of those priorities. Can we clearly see where we might want to reallocate capital to get to the outcomes we're looking for? Is an area that we're seeing a lot of organizations that are high performing. They figure that out and they're doing a really nice job of that. Those that are struggling a bit more, it's because they don't have that data, and they're looking for ways to be able to not only gather the data on the front end, but be able to track over time how those assumptions change.
Yeah, so this example is a good one around really letting data drive. So if you think about SPM, what is SPM? Strategic portfolio management, in these high performing organizations, and it's really a way to kind of enable you to be nimble and agile enough to kind of out innovate. It almost could be considered a disruptor, an internal disruptor, to make sure that you're on the leading edge, and so you're out in front of the market. This example is an investment firm that really prides themselves in being able to do that with all of their portfolio companies. They identify companies, in various states, and come in and bring them back, get them performing well. In order to do that, they really lean on the performance and the data of the organization to drive all of their decision making. And it follows such a logical path around, what do we want to achieve? What are the key outcomes and KPIs that we want to optimize for? Okay, let's ideate, company. Let's figure out how we're going to achieve those. And define some expectations. Based on that, let's make some decisions, and then let's execute and track that performance. And where those don't line up, let's pivot, let's reallocate, let's change direction. Let's stay in front. And that's what this investment firm is doing, quite successfully with all of their portfolio companies. But we can just as easily turn it inward and say, this is what an SPM organization and a transformation office does for its own organization. And we'd be happy to connect you with this company to kind of hear about their experience and how they've implemented this.
Yeah, thanks, Mark. I think we're seeing that trend, right? A lot of the private equity firms like that one have brought folks from, the likes of the leading advisory firms in the world to apply that methodology that you're using to do transformation, into those portfolio companies to get them, executing at a really high level, but in very data driven way, very objective, not subjective, really focusing on outcomes and, how are they achieving those. And I think it's that discipline that makes a high performing transformation office work is certainly applicable both for those firms as well as on the operational organizational side. So what we're seeing and what we saw in the study as well was that there was just across the board responses that there was a need for better tools and processes. So when we talked about what are the real needs of the SPM office that maybe they don't have today or they're struggling to produce, first and foremost was being able to improve those internal processes and deploying technologies, being able to improve that portfolio visibility. Financial planning and cost management was certainly key to most organizations. We talked a lot earlier about prioritization, resource planning, certainly, and then that ability to conduct scenario planning. So that for those that aren't as familiar with scenario planning, right, that ability to define multiple potential buckets of strategic initiatives, both based upon what we're going to invest in as well as the timing of those investments, be able to understand the impact on everything from our budget consumption to our potential dependency conflicts, resource conflicts, to be able to really optimize the portfolio. So, all these things come together for a really kind of broad set of needs that I think the high performing transformation offices and strategic portfolio management offices have started to figure out. But I think the average organization is continuing to try to determine, how best to achieve. So let me quickly jump to the next slide, and I'll hand it back to Mark.
Yeah. So this example, this is an interesting one. It's a medical device company, but the operative word or phrase is fast growing. So this company is they're growing exponentially. It's a massive organization. They are quickly running through those maturity gates, that companies go through from small, medium, large, massive. They are flying through them. And so they are hitting all of these challenges just one after another in quick succession around kind of growing pains. And this company, they've had a bunch of tools over time that they've leveraged and used and have kind of been picked up and used internally in the company. But they quickly hit a phase in their growth that they needed a transformation office. They needed a strategic program management type of solution to not only manage delivering on the growth and keeping up with all the orders that are coming at them, but also growing in a forward-looking way, kind of setting themselves up for success in the future. So they had to go out and find one, right? They couldn't just use all of the tools that they had internally and kind of hodgepodge it together. They had to find kind of a purpose-built SPM solution to really manage this thing. And so that was the big point here, is that they quickly found that, using PowerPoints and spreadsheets and a couple of other products, like many of us do, starts to fall down, right? When you hit a certain scale, and you need to find something that truly supports defining objectives, setting targets, tracking KPIs, delivering on that vision. And we've been working with them for about a year and a half at this point. And we're having great success. They're having great success in defining that transformation office and kind of getting everything under control. Even all the while, they're still growing at a really fast clip.
Great, thanks, Mark. So I wanted to take just a minute or two before we wrap things up and focus on the number one transformation type that was identified in the survey that folks are focused on in their organization, and that was really AI and data science. 60% of the respondents said that they had established an AI center of excellence to apply technology for trying to really maximizing the value that AI was having on the organizations while managing the risk and really doing responsible AI. And as they did that, what we found was, they're really interested in using AI in some key areas. So number one that we saw from the respondents was they were looking to have AI contribute to quality control, right? So how do we analyze past projects and identify success factors to really drive consistency and repeatability in our performance? The second one was around automating that documentation report creation. So how do we help really make things more efficient in terms of how we both communicate progress and status and effective execution, as well as how do we course correct? Portfolio management, so being able to balance and diversify. So using AI to make predictive analytics around how we should diversify and balance our investment portfolio. And then risk management, right? How do we identify early warnings that our products may be at risk and predict risk, right? How do we make it far more objective than it is subjective to identify and predict risk? And then there's a broader set that certainly the respondents came back with. Those are the highest level ones on how they're thinking about and wanting to apply AI as part of their portfolio management office. So Mark, do you want to talk a little bit about kind of what we're seeing there as well, and how we're trying to help our clients?
Yeah. So, everybody's very excited about AI. We are just as much as everyone else. And really every employee at a company is excited about it, trying to think of ways that they could kind of include it in the way that they work to improve their efficiencies. The problem with that is there still needs to be some way to kind of control all of these great ideas that the organization has around applying AI internally. There's a lot of risk with it. We've all seen the stories out there. We need some way to capture this idea and start to define those risks and those expectations of all of the AI ideas. We've seen a lot of our customers asking about this. This one example, this reinsurance customer, they've actually formed a COE all around it to be able to better govern all of the ideas around applying AI into the business. There's a lot of risk involved in this, especially when you're in their market, reinsurance, but really for everybody. To make sure that the AI is performing as expected and really giving you that efficiency gain that you thought it would. And so they needed a way to intake all of these ideas, define the business case, define the risk and complexity related to this idea, and then apply some investment governance to it. All of them are great ideas, but we can't say yes to everything. So we need some way to prioritize. And so that's what this organization has done, and they've gotten that well under control. Of course, there's still a lot of people out there doing things, but this COE now has a governance process, and there's a method around identifying an idea all the way to prototyping it and making it a live offering, right? That is available either to the market or to the internal employees of the company.
Great. Thanks, Mark. Really appreciate it. So JC, I want to hand it back over to you to help us kind of.
Yeah. Thanks, Bob and Mark, for kind of sharing all the key results and the contextualizing it and bring all of this to life a little bit. Let's see. If you have any questions, you can just type them into the chat. So we have one, right? Going back to the idea of having a COE or a center of excellence to govern your technology innovation initiatives, including AI. Mark or Bob, do you want to talk more about how this reinsurance customer or other Shibumi customers have stood up their COE in a way that makes sense for their organization, how they've structured their COE, what kind of roles are part of the group, and how they kind of measure their success?
Sure. I mean, I can start with a couple things, and Mark, maybe you can chime in. I mean, the most important thing we've seen for very high performing organizations is that they have a reasonable process and structure around really that first cycle diagram that I showed, right? Do they first and foremost, have a good way of understanding what are the KPIs that they've agreed as an organization are really critical to their success, right? And is there a clear understanding in the organization around those strategic objectives that they've defined, and what are the measures? So as you're considering initiatives or investments, do you have a clear understanding of both the alignment that those initiatives or investments have towards those objectives, and kind of how can they have a measurable impact? So when you're defining, ideally then, or triaging an idea, you can say, first and foremost, is this aligned to our strategic objectives? The second is, hey, do we understand the measurable impact that this is going to have on something that we've deemed important and critical to the business? And then give you that ability from a process perspective to be able to evaluate apples to apples in investments, right? Can we look at how certain investments are going to impact those objectives versus others? And then what we found historically is there's a lot of great ideas out there. There's a lot of great ideas that have really strong ROI associated with them, but having the process in place to understand the resource requirements, both financial as well as human capital, and what are the competing priorities in the business, to really be able to make good decisions in terms of where we allocate our capital and how we prioritize, is really key. So kind of taking that business case, bringing it to life, and allowing you then to use that data to understand those potential conflicts and give you the ability to prioritize. Then the other big thing about that is, by having that process in place, you're able to then monitor, I think, the performance and progress and key assumptions of those initiatives along as you're executing. So you're able to do some of the stuff we talked about, where you're in a position to be able to course correct, potentially reallocate resources, reprioritize. And then you're also able to produce the kind of management reporting you need to continue to get support and funding. In terms of roles, I mean, Mark, maybe if you want to talk about that, or I'm certainly happy to, but
that's actually what I was going to mention. Yeah, so there are definitely roles of the COE itself. Different people that are on that team that are involved in kind of managing that flow of ideas and approvals. The other interesting thing, though, is it always helps to involve others. So as that first idea, could come from anywhere in the organization. But that person may not have a clear understanding of the full business case, of the full risk, of the full financial and non-financial benefit that this idea will provide, whether it be an AI idea or any idea. And so getting other people involved to help round out that business case is really important. For instance, somebody from finance could play a role to define some of the financial expectations. Somebody from IT could get involved, especially around the AI idea, around defining the risk and a bit of the complexity around producing the AI solution, whatever it turns into. And so having a bit of a federated approach to that, to really provide the data that the COE team needs to make those decisions is a big aspect of it.
Yeah, and I think so. So we talked a little bit about process. We talked a little bit about people. And then I think the final one is typically going to be the technology, right? How do you get a single source of truth for this information? So we know a lot of organizations do a really nice job of gathering business case information when they're reviewing an idea. Many of them have either really detailed spreadsheets, or they've got really detailed PowerPoint decks that are kind of positioning the business case for a strategic initiative. The challenge with that is, without a real data-driven approach to this, once you get that idea past that initial evaluation step, that allows you to monitor those assumptions over time and really understand the impact and changes of critical assumptions in some type of a system, you're going to struggle, right? Because you're going to have now a project plan being executed by your team out in the field that had critical dependencies in the business outcomes that you're expecting. Those may get delayed. Those will shift the resource requirements that you're going to have. They're going to shift the capital requirements you're going to have. And just as importantly as anything, they're going to shift potentially the net benefit that you're going to experience. And understanding that, and understanding where those conflicts are going to exist, and get people that Mark mentioned back together to be able to make some critical decisions around reprioritization, requires technology. It's near impossible to do through manual effort. So I think the high performing organizations we're seeing are setting up the right process and structure first. They're making sure the right cross-functional set of people get involved second, and then they make sure that they have a technology platform of some kind to be able to gather data and be able to communicate and track it effectively. All right.
That's great. One additional question, right? Which is, as you know, you guys have talked about before, we see with our customers, they may have some sort of like business unit specific or team specific tools that they think work for them, or maybe they're not tracking things back to certain core KPIs, and then there is this sense of anxiety or nervousness around having to adopt something new, right? So if somebody is leading an SPM office trying to drive this discipline, how do you recommend people they then work with, you know, the core business units or whoever to kind of smooth the path?
Sure. Yeah, I mean, one of the things we've felt really passionate about for years is that it's really hard to introduce process change and technology change simultaneously. And one of the key things that we need to look out for is, are there systems of record already existing in an organization, right? Are people really accustomed to using tools to track and manage information effectively today? And our mindset, certainly at Shibumi, is that if you're managing data effectively today, let's say I manage projects in Jira and I really like managing projects in Jira and that's effective for me, that's great. People should continue to manage those projects in Jira. There's a separate audience for the strategic portfolio management decisions because at its core, it's an investment governance challenge, right? We've got capital that we need to allocate to a set of projects or initiatives, and we need to understand the ROI we're going to receive. We need to understand the impact. We need to understand competing priorities. And to do that, we don't need to track every last task and every last project in the same tool. So integration to us is really critical. Right, the fact that what you really should be doing is integrating your portfolio management tool, whatever that tool is, down to the different technologies that you're using in your organization to do more line level work. Right. So if I'm managing a project in Jira, that's great. There's probably a handful of milestones in my Jira project that are going to materially influence the key benefit assumptions I have or materially influence the timelines of my resource requirements. And if I can do that in an effective way and still let my teams manage the lower level project detail in Jira, that's great. But what I'm going to struggle with most likely in my traditional project management tools is the ability to really understand the impact of changes in my plan on the outcomes and be able to really forecast to leadership, what's happening around both our ROI as well as how we're doing in terms of our overall return on investment of our portfolio, as well as really be able to clearly articulate at different levels of the organization the impact these initiatives are having and where our risks lie. So we really think about it as kind of different layers of communication, different audiences, and really encouraging people to use the tools that are right for the job. Just like anything else, have you guys ever tried to do a project at home and you use the wrong tool for the wrong job? It makes it a heck of a lot harder. It's not that you couldn't do it. It just it'll just tend to be much more challenging. But Mark, any other thoughts on that?
I mean, the only thing I'd say additionally is that layering. We also use it for the SPM solution itself, for the SPM approach. So maybe one organization has a method, a framework that they use to execute their programs. Okay, you can use that framework. That's okay, as long as you are accounting for these key KPIs and objectives. Another organization has a different framework or method that they want to use. Again, that's fine, but as long as there's some consistent KPIs and objectives that are being tracked in both, then you get that roll up and that kind of central aggregated view, which is really
yeah, Mark, that's a great point, right? Most executives and specifically boards are looking for a consolidated view of how all of these distinct strategic programs and initiatives they're doing contribute to that common set of objectives. And right, it's very, very rare that an organization has that visibility, right? There's these programs and these initiatives are being kind of managed in different pockets, often using different tools because they have different methodologies that they're doing, like a new product launch program that's going to drive revenue growth is distinct from what we're doing around a merger integration, but that merger integration may drive revenue synergies for us that are contributing to that same KPI around revenue, right? We've got multiple different programs going on in the organization to drive OpEx or CapEx reduction, cost optimization. I might have an automation program going on over here to automate business processes. We might have AI activities going on. Other, we might have procurement or supply chain initiatives going on to try to drive efficiencies on both those sides. So all of those things at the end of the day are contributing to this core set of KPIs. If I'm a CEO, which I am, or a CFO, I'm very, very interested in a consolidated view of how these programs are influencing that. What's really challenging, right, is can you have tooling that can support those different methods, but can actually track a common set of metrics that gives you holistic visibility? And then again, being able to dig down into the organization on all those critical interdependencies to make sure that as things change, you have a realistic view of your ability to hit those outcomes or achieve those results. So that's the challenge of it, right? We always remind people that at the end of the day, make sure anything that belongs in a business case, you have some effective way of being able to track, manage, and deliver on. If you do that, you'll be much better equipped to be able to deliver on it.
Yeah, thanks for that. That's great. Okay, we don't have any more questions. With that, I'd like to thank everyone for joining us today and thank Bob and Mark for speaking. And we hope you have a good rest of your day, but don't hesitate to reach out to us if you would like to connect, if you want to learn more about the customers. And finally, this is Shibumi. We are having a global user conference that we welcome you to attend. It's a 2-day event in Detroit, Michigan, and that is more information is available on our website about that event. It's a great chance for both practitioners, whether it's Shibumi customers or if you're not a customer, to learn more about kind of transformation best practices and network with your peers and get some practical ideas on how to move things forward.
All right, great. Thanks again, JC.
Thanks.
Thank you. Thanks,
Bye.
everyone.